Imagine waking up tomorrow and discovering you're officially worth $1 million. Sounds like financial freedom, right? But what if I told you that millions of Americans with seven-figure net worths still struggle with cash flow, debt, and financial stress? Because the number everyone celebrates, your net worth, is only part of the story. Today you'll discover why the wealth you think you own may be an illusion, and how understanding one simple concept could completely change the way you build real financial freedom.
Picture a neighbor who pulls into the driveway of $1 million home in a brand new six-figure luxury car. They wear designer clothes, take lavish vacations, and boast a massive salary. We are wired to look at this lifestyle and immediately assume we are witnessing the pinnacle of financial success. But there is a strong chance this person is entirely broke. People consistently confuse visible spending with actual financial health. We see cash flowing out of a bank account, and we mistakenly assume it represents the wealth they have kept. This equation is the ultimate financial scorecard. Net worth is simply the total value of your assets minus your liabilities. To figure out who actually has money, look past the flashy cars and focus entirely on calculating the components of this hidden math. First, you have assets. These are valuable things you own. Small, everyday assets include phones, jewelry, and sneakers. But large assets, the ones that actually build wealth, are things like stocks, real estate, or a private business. On the other side are liabilities. These are the debts you owe to others. Car loans, student loans, and credit card balances constantly eat away at your bottom line. This chart shows exactly how liabilities drag you down. If you hold $500,000 worth of assets, but carry $300,000 in credit card and loan debt, your true net worth is only $200,000. Income acts as the fuel for this entire ecosystem. It is simply the inflow of capital entering your accounts from a job or a business. High income on its own is not wealth. That fuel is immediately drained by expenses. This is the constant outflow of capital required to maintain a lifestyle: rent, bills, gas, and subscriptions. If a person makes a huge salary, but increases their lifestyle expenses to match every single dollar they bring in, they accumulate zero remaining capital. Their net worth stays completely flat. A large paycheck only creates actual wealth if the surplus cash bypasses lifestyle expenses and is deliberately converted into large assets. Yet simply holding a massive asset doesn't mean you own its full value. To calculate true wealth, we have to factor in equity and leverage. Take a look at this pie chart representing a business worth $1 million. If you own a 51% slice of that business, you hold $510,000 in equity. Equity is the exact portion of an asset you own outright. Often, buyers use leverage. They borrow capital from a bank to acquire larger assets than they could afford with cash alone. If the asset goes up in value, leverage acts as a powerful multiplier for their gains. But leverage carries strict risks. If the asset's value drops, your debt obligation remains exactly the same. The debt quickly consumes your equity, pushing you toward a default where you can lose the asset entirely. Another crucial factor to watch is liquidity. This metric measures how easily and quickly you can sell an asset and turn it back into usable cash. Highly liquid items, like publicly traded stocks, can be sold almost instantly. In contrast, massive assets, like a house, have low liquidity. It can take months to find a buyer and free up that capital. While that capital is tied up, the market constantly shifts. Over time, healthy assets undergo appreciation and become more valuable, while other items experience depreciation and lose value. A durable net worth relies on finding a careful balance. You need high equity, appreciating assets to grow your wealth, along with enough liquid cash to survive sudden financial shocks. Let's look back at our neighbor. When we apply the net worth equation to their situation, the picture changes entirely. Those designer clothes and high-end vehicles are small assets undergoing rapid depreciation. Their entire lifestyle is artificially propped up by extreme leverage. Between the massive car loan, the oversized mortgage, and maxed-out credit cards, their liabilities far exceed the value of anything they own. Their true net worth is deep in the red. Genuine wealth is inherently invisible. You don't see it in driveway status symbols. It exists quietly in high-equity business stakes, appreciating stock portfolios, and a strict avoidance of toxic debt. Take a hard look at your own financial ecosystem, tally up your hidden assets, subtract every single liability, and calculate your true baseline. When you stop spending capital to create the illusion of looking rich, you finally start building the mathematical reality of being wealthy.